morning, everyone. The big day has arrived. It is the budget day. Today is when 3 hours from now, the Finance Minister is going to be tabling the budget 2022 in Parliament. Of course, you're watching this live and special coverage on ET Now with me, Ayesha, Faridi, and I've got Nikunj, Dalmia as well joining in on the show. Nikunj, we've been counting down to this day. I know markets and global market meltdown has kept a better part of our minds occupied. But it's here. I mean, it's all on the Finance Minister. We've seen a nice 3-day recovery play out in the markets. Can she really pull up a magic trick? Can she pick out a rabbit out of the hat? It's all in her hands now to keep the market momentum and recovery intact.
Ayesha, good morning. The Indian budget is never a sideshow. Even though over the years, the impact of that on markets in terms of the immediate reaction, the intraday volatility is getting less and less significant, but in terms of an intent, in terms of what they want to do, where they think things are likely to move, in terms of the government thought process, I think all that is in a sense, the budget in a sense sets the tone for all that. You got to divide the entire, the budget into 3 parts. First, what it means for the economy. B, what it means for the macros. And see what it means for the market. So I'll start with the economy part. We all know that the economy has not seen a very universal recovery post-COVID. It's more like a K, where some parts of the economy have done well, some parts of the economy are still struggling. What can be done to address that? On the macro front, just when we thought that inflation had got crushed, well, crude is at $90. There are serious global concerns around inflation, bond borrowing at a time when interest rates are likely to go higher. How will the macro management move? And then you got the markets. Well, markets last time did cartwheels post the budget because the budget 2021 struck all the right chords. It was a clean budget. It was a growth dominated budget. There was no changes in taxation. Having said that, this time because of the global selling and what is happening on the FI front, more like technical in nature, are clearly overpowering the market setup. So the good news is that markets are not light, but they're feather light in the run up to the budget. Even if budget is in line or slightly above what markets are penciling in, I think we could be in for a relief rally. So I think you should play for a bounce because markets are light, and once the event risk is behind us, I will not be surprised that you could be in for few days of technical rebound stroke a comeback, at least in some of the large cap industrials and cyclical stocks.
Indeed, K-shaped recovery it has been. The GST collections have been robust, but the Aam Aadmi's pocket has been getting pinched, especially given the spike up that you've seen in fuel prices. So yes, while that of course is RBI's baby on what they're going to do, considering they're stuck in between a little bit of a rock and a hard place kind of situation, that we'll find out sooner. But all eyes today on the Finance Minister on what is it that she can do with the fiscal consolidation plan. And of course, the Dukti Rag, that's been disinvestment / privatization. So all eyes really on that one, considering that's taken surely a big backseat now since the COVID years. So while definitely over the last few years, like Nikunj also said, traditionally the impact of budget on the markets has been weaning down. But remember, I must remind our viewers that last year, same time around, not just that the Nifty popped up a good 5% on budget day, but you had a very nice solid 2-week post-budget rally as well. So can we see a repeat of that or not? But anyway, that debate, we'll leave it to our guests. I just want to quickly mark what the global setup as well is looking like because, off late, we've completely been in sync with what the global markets have been up to. Fortunately for us, you've got a decent handover coming in from the global equity markets. Overnight, you've seen the US equity markets hold out strong. In fact, it's been a solid 2% move that you've seen on the S&P 500 index. NASDAQ as well, a solid 3.5% bump up coming in. Asia, of course, is opening after a day's break, given that it was the Chinese New Year. So that as well is holding out quite okay. And I must add that the SGX Nifty as well is indicating about a 1% odd kind of uptick. So let me now then welcome our guests, faces that you see on the channel every day. Sandip Sabharwal as well as Kunal Nooresh joining in. I also have with us Nooresh Mirani too on the show. Gentlemen, hi, good morning. 365 days in a year, we've been analyzing and anticipating what the budget can and cannot do. But Sandip, morning firstly, let me kickstart the discussion with you on budget day. Over the years, of course, Sandip, the significance of budget has come down and fallen down for equity markets. But today, could it be any different? Could today be a repeat of what we saw in 2021?
Hi, morning, Ayesha. So, if you go back and analyze what happened in 2021, actually, one of the big announcements was the bad bank thing, and that led to a huge amount of excitement. But as we sit and talk today, there is no bad bank per se operating. So, I think budget led excitements or disappointments tend to be short term in nature. But then there was a promise made by the government a couple of years back that on the 75th year of the independence, relief will be given on the direct taxes front to the taxpayers. They said that we can't do it now, but we'll be looking to do it later. So I think that's one thing which could potentially be done. Whether they can do it just prior to state elections and whether it will be seen as influencing voters, that I'm not so sure. But I think that's a promise that the government made fiscally on the indirect tax collection front. They are doing reasonably well. They have kept the expenditure reasonably under control. So can they give relief to the direct taxpayers, which is necessary today? And like you were saying that inflation is high, crude is above 90, and most of the companies, if you talk to, they've increased prices by 10 to 20%. So in this scenario, direct tax relief is what the budget could do, because indirect taxes are now out of the budget per se. So I think that's one thing which I'll be watching out for. Secondly, I think on capital expenditure, what they can do, because as consumer demand gets impacted because of high inflationary pressures, the one thing which can drive, and India has a huge scope for that. Like India is not like China, which is now in an over investment zone where further fixed asset investment to a huge extent actually doesn't create economic value, because most of the assets which they have created are as it is underutilized. India has significant scope for infrastructure development across the board, be it anything, be it roads, airports, ports, or metros. So there's still a huge scope for public-private partnership and government contribution there to improve that aspect. And as such, because that has a huge multiply effect on both employment as well as consumption of many materials. So whether the government takes fresh initiatives there or not, that's something we'll need to see.
Okay, so I'm just going to now establish the most important graphic which in a sense tells you the story. While budget is crucial, Indian budget at least is never a sideshow. It is a statement of intent, an indication of directional thinking of the government. Over the years, the budget volatility, having said that, has just got minimized. And let's establish that data for you with the help of this graphic. There you go. If you see, this is again a Morgan Stanley graphic, which just tells you that how the budget volatility over the years, and just focus on the peak and the turf there, seems to be getting crushed. On an average, you will see 3 to 3.5% swing, and we are looking at benchmark indices. But remember, the importance of budget over the years has only got marginalized, and that is something which we need to be cognizant of. Nooresh, what is the trade for the day?
Trade for the day is to be long. What we are looking at is the budget is one impact, but the impact majorly comes from the global markets. So even if we look at all the budget days, wherever the next few days trend has been good, it has been good for the world also. Yesterday we had a good closing for Dow Jones. So we have a catch up to do out there. So the viewers stay long, and I would expect 17,600, 650 to be tested on the Nifty. Once that is crossed, that is where the momentum really shapes up really strong. So watching out for that mark. But for now, I would expect a test of 17,600, 650 at least.
All right, let's talk a little bit more about the market setup. Yesterday, we did see quite a steady rally going into the budget, as we spoke of this morning as well. The SGX Nifty indicating that it could be a positive start. Nooresh Mirani is with us as well. And Nooresh, just yesterday we were chatting and talking about how perhaps maybe boring is better at a time like this, that we don't want to really upset the setup that we've seen for the market. So maybe let's not go in with very high expectations and just hope that everything sort of remains intact, particularly in terms of the market standpoint and what we've witnessed in the past few trading sessions with respect to that acute volatility. So given the way we wrapped up trade yesterday, the fact that we saw the broader markets participate, the Nifty Bank as well as the IT index hold out, what is it that you're working with? How should people really position themselves ahead of a big event like this?
So ahead of this big event, one has to accept the fact that it is no more as big an event. So when I say as big an event, there was a time we would say move 1-2% at every particular sentence in the budget 10 years back. The volatility indices used to be much higher at 30 plus. The average volatility was much higher. Now that is changing, and that is changing to the fact that we'll have much lesser moves, but even that lesser moves will be relatively higher than the normal days. So overall, the structure of the market is clear. We've made a short-term bottom across the world. So it's not just India, but the whole world markets have created a short-term bottom, and that is luckily well placed with the budget. So and the expectations are relatively lower in this year. So I would expect a move towards higher levels as soon as the budget speech gets over. So expectation is a move towards 17,600, 650. The only shift one has to start seeing is start focusing on companies which were underperformers of the from March 20 till now. That is where banks, autos, financials, capital goods, and various other opening up themes, whether it is hotels, whether it is cinemas. So this is the place you would like to be. The place where you don't want to be is over the bounce back. One needs to get out of the IT names, the digital names, etc., the new age tech, and start focusing on core businesses. So that is the strategy to go with.
I mean, while we're debating that traditionally on market day, or rather budget day, markets haven't really reacted a whole lot to the budget, barring, of course, 2021 when we shot up about 4.7% on the Nifty alone. The observation this time, and I'm going to come to Kunal as well on this later on, is that the market is going extremely light into the budget event. I was just looking at data when it comes to stock futures, the Bank Nifty OI, or for that matter, how the Nifty futures as well have been building up. Does that then pave the way for a wild swing either way after the budget announcement?
Ayesha, look, if the budget is something which, let's say, markets want, conscious about maintaining fiscal deficit, something big in terms of capital expenditure, nothing big in terms of any tax changes, markets will say, look, thank God the event risk is behind us. And you may actually see a little bit of comeback. But let's say a week from now, 3 days from now, it will be back to global cues, because that is the underlying linchpin or the real brute force which is at play right now. The brute force of FI liquidity. Will it change because of budget? I doubt very much. But yes, if you are an outsider, you said, look, I too risk at the beginning of the year. One, what Fed would do. I know now which way Fed would move. And then budget, where the government messaging, if it is clear and if it is in the right direction, that look, they are here to not change the tax regime, they want to spend and bring the economy back, they are bothered about what is happening to the rural economy, then it may be a bit of a relief rally which cannot be ruled out. And Sandip, is that the bounce we should play for? It may be a 5% swing, it may be a 10% swing for individual stocks. But once that budget event risk is behind us, Sandip, does it make sense to buy into companies where we know that expenditure by government will change the fortunes of those companies? It could be clean energy, it could be environment, it could be healthcare, it really could be something on fuel and hydrogen fuel. Sandip?
The focus of the government on clean energy, moving towards a more carbon neutral kind of economy is real. So to that extent, whatever plays are there for that, that obviously is not only a budget play, but also a directional play for the next few years. So that people obviously need to play. The second part is on capital expenditure, that's been sort of a tough thing over the years, because ostensibly the government announces a higher capital expenditure, but then eventually on the ground, that whether that happens or not, that always remains a question mark, and that tends to create some move in these companies which fizzles out. But this time I think it could be different, because this could coincide with an actual cusp of revival in the entire capital expenditure cycle. We know most of the companies' announcements, etc. Everyone is seems to be expanding now. So to that extent, one, there's a company-led capital expenditure. Secondly, if it gets fillip from the government, then obviously it adds up, and that's necessary at a time when it will be tough for consumption to drive higher economic growth given high inflationary pressures. So I think that theme this time could actually play out for the real.
Okay. So Sandip, a straight one-line question and a 30-second answer. What is Sandip Sabharwal's best budget idea? The idea which remains a buy before the budget and will not change irrespective of what the budget today is. Give me your best idea. Budget, no budget.
If you're looking at it, I'll take a cue from Nooresh when he talked about the reopening trade. If you ask me in terms of percentage gain, good quality company where business, where I think once this entire COVID thing goes away or reduces, and there's going to be huge revival is other cinemas, I think. So the thing which remains a very good idea is Inox Leisure. I think at 400, it has a potential of a 50% return till the next budget.
All right, let's also get you some insight and interesting tidbits from the previous budgets, budget trivia as we like to call it. So let's start off with the longest speech, and that was just 2 years ago, where we had Finance Minister Nirmala Sitharaman, and she delivered a budget speech of about 2 hours and 40 minutes. So it remains to be seen what takes place today and whether or not she's going to exceed that time limit or perhaps be before that. You also had a lot of budgets that have been presented by previous finance ministers. The maximum number of budgets that have been presented, well, they belong a total of 10 to Morarji Desai, and not too far behind is P. Chidambaram with a total of 8 budgets that have been presented. In fact, in terms of the working day that the budget was presented, not too long ago, just 2016, you had the budget that was presented up until then on the last working day of February. And after that, they've shifted the clock behind. It's the 1st of February since then. It was Indira Gandhi who was the first woman who presented first woman to present the budget on Feb 28th, and this is way back in 1970. In fact, it was in 2019 that the Finance Minister, Nirmala Sitharaman, ditched the colonial legacy of the traditional ledger, and Bahi Khatta is what she adopted to carry the budget papers. Then that was replaced by the tablet in 2021, and the first ever union budget that was under the British rule, well, that was presented by James Wilson on the 7th of April in 1860. So lots of interesting tidbits there with respect to the budget. And in terms of the budget by words, well, the prize, shall we say, goes to Dr. Manmohan Singh in the year 1991 with a total of 18,650 words, Ayesha.
Yes, indeed. That's some trivia coming up for you. But Kunal, I just want to get you in here. What we were chatting about is the market positioning ahead of the budget and the fact that market is going into the event a little bit light. I was just looking at some data points. The FI net long positioning, futures that is at 32%. And I understand that's the lowest level since 18th May 2020. So that's a 2-year low that we're staring at. What are the other data points indicating, Kunal?
Well, absolutely. Yes, Ayesha. So, good morning, first of all. So, add to that, the open interest data on the Bank Nifty and the Nifty futures also portrays very similar kind of an outlook. So, for example, on the Nifty, we are now back at that 2 lakh contracts as an open interest. Just about a couple of months back, the open interest had swelled up to almost 3 lakh 10,000 contracts on the index. So, there's been a very sharp reduction almost like a 30% to 35% reduction of open interest in the last few weeks for the markets. Add to that the banking index as well. The OI has dropped towards 85,000, 83,000 contracts. That with an average of 1 lakh, 1,06,000 over the last couple of months. So yes, the data also indicates that the FNO side, from the FNO side, Bank Nifty and the Nifty OI has dropped significantly. And this is not the first time that we are seeing this approach from the market. The last 3 times, just prior to the budget or pre-budget, the markets went into a corrective phase. The correction was very sharp in 2021, and the markets went in light just prior to the event because of the unexpected, outcome of the event. And then, post the budget, we saw the markets getting into a very sharp uptrend in the last 3 times. So both 2019, 20, and 21, in all 3 occasions, we've seen a very similar kind of a trend where the OI drops, the price corrects just prior to the budget, and post that we've seen the markets rallying. So we can just hope and expect that it's going to be a very similar texture to the markets this time around. Just one more data point which is also very important is there has been huge amount of out of the money call writing, like 17,800, 900, and add to that even an 18,500 strike. So someone is playing a wild guess that probably the indices would sharply rally. So we need to watch out for all of these important cues. If the FNO data stays, then we could be expecting the markets to gain substantially post budget as well.
I was just looking through the data points as to what the markets want and what is it that the markets are going to be disappointed with. And, while of course at a macro, larger picture level, a pro-growth budget, investment-driven budget is something that the markets would surely like. But yes, a credible, gradual fiscal consolidation plan is something that the markets would definitely want. Tax tweaks to pave way for bond inclusion in global indices. Now, this is one point which has come out time and again in our discussions with most of the market experts. This is something which the market is highly anticipating. What is it that the markets won't like? Obviously, unproductive doleouts, urban manrega, higher than anticipated rural spending. That's not something which is going to have a multiplier effect. And I'm going to, check in with Nikunj as well about this. Obviously, the fiscal consolidation plan without, credible layout is something that we would definitely be looking out for. And any new taxation for HNIs, FPIs or the super rich never goes down well with equity markets, does it?